Alright, live, man, live. I'm back on my proper shit, right? In the correct state of mind, the calm, the patient, the wise. I took a little bit of a detour, but on that detour, I learned a lot about the market. But now I'm back. I'm back on the main road to success, and I've got all that experience from that little diversion, and I can take it moving forward. It was just all part of the process. I had to take an exit to then come back to then be like, boom, I know what I'm doing now. Let's hit the road at some speed again. You know, perfect analogy right there. But in the process of learning, lose the 100K. No, I didn't lose it. Sorry, it cost me the 100K to learn. So the 100K verification failed due to overtrading. Hit the max daily loss. I bet it all on 1 week, and I was like, boom. I feel confident. I feel confident. I fear nothing. I fear nothing. And then yeah, I lost it. But it's cool, man, because it taught me a lot. Risk management, especially important. Going on a massive losing streak taught me you have to be able to weather the storms and weather the storms of drawdown. Like that drawdown wasn't because of my strategy, but it was due to my psychology. But it just taught me that these losses are going to come where I'm human, right? I'm not a robot, so my mind is going to slip up sometimes. Life is going to hit me, and it might affect my trading in a different way, and then I'm going to have to adapt. And because I've never gone through that experience whilst I've been trading, I might not realize at first, but the effect that it has had onto my trading. So it's just a constant progression of learning and adapting. Review, move forward, review, move forward. But a 25K account, the 25K account is still going strong. Strong, yeah? It's still going strong. You know, we are 500, which is 2% away from losing the account because I use risk management, right? I risk the 0.8% per trade. So I still have this account which I can bring back out a drawdown. You know, I have two more trades to take. But obviously on a lot more patient vibe right now. Back where I was in September, where I didn't trade for 4 weeks. I'm back at that. I'm back at that state of mind, but an even better, more developed state of mind because of all the experiences I've had, because of the market experience that I've had since September alone. Since then, the market experience plus the fucking sidetrack down the side road, and then being back on the main road now. I'm ready. I'm ready. Yeah, I understand how I can understand how I can get to from A to B, right? And then B will lead me to C. And probably going to be another side track and side road to get from B to C and then C to D and so forth and so forth and so forth. The never ending alphabet. But we're going to do this. Yeah, we're going to do this. Day by day, week by week. Beautiful. Right. So this week's markets. Euro USD. One thing that I've started paying much more attention to, which I've learned, is look at the trend, right? So NZD USD is the best to explain this. You see here, right? I'm just going to mark these out very easily for you to see. Let's not do that. So lower high, lower low, lower high, lower low, shift of structure, lower high, lower low, lower high, lower low, lower high, lower low, right? So just seeing how the trend is being respected by this market. That is literally it. I'm just looking to see how well respected is the trend in the market, because each market is going to have its own way of dealing with it, right? Some trends may be like this where you can just see super clean push, pull, push, pull, push. So when you're at the point of okay, you see this and you see price push, then price comes back up again. We see the indication of a potential lower high. This is a market that I want to trade. This is a market that I'm going to trade very confidently because we can clearly see that the trend is being respected. So I can see that when I do get an indication that the market is going to create that next impulse from my strategy, this is a market where the probability is very high of playing out. And that's something that I've learned and that I've been applying the strategy to unprobabilistic markets. Now, I understood that and I would look for the confluences as well, but looking at the trend of how the pattern's reacting to the trend, I guess. How the trend of the market's direction, okay? Does it create a shift of structure and then just reverse? Does it keep doing that constantly? So if the market does create a shift of structure, am I going to be on the lookout and on the fence of taking this trade because it's done it twice before where it's created a shift but then just instantly carried on in the trend's direction? Or is it an instance like this where the trend is being respected? So when I see this big fuck off shift of structure, I know that there's a very high probability that that is actually going to play out as a reversal because the market has clearly been respecting the trend. So if it's going to break it, we can anticipate a potential new trend to begin and be potentially respected, right? Now, waiting for a higher low, easy. But back to Euro USD. Euro USD. We're breaking under this support level on the weekly. We've just had a break retest, engulfing, bit of a no candle straight after an engulfing. But again, when you take this pattern approach, right? Area of interest is solid, EMA solid, trend is solid on the daily. I'm looking at what the market has previously done, right? We'll go through this again, right? Shifted structure here, lower low, lower high, lower low, lower high, failed to push down, created a second lower high, rejecting the EMA again, lower low, not a lower high. But are we creating this same pattern that we did here, creating two lower highs, just on a bigger scale, right? So that is what I'm looking to see. So if this market does give me my engulfing and then my lower time frame confluences, I will take this trade. I will happily take this trade, right? This is a market that I would apply it to. 4 hour. The 4 hour is going to be, I'm looking for a break and a retest after the engulfing under this strong support level. You know, it's clearly not one to be sold into. GDP CAD. GDP CAD. Do I have GDP CAD? Right. This market ain't the cleanest. I'm not going to lie. But what I really do like about this market is a weekly counter trend trade, right? Because we can see higher high, higher low, higher high, higher low, higher high, shift of structure, instantly went to shift structure again. Instantly went to shift structure, then shifted back to bearish. So, you know, the market's it's here and there, okay? It's here and there. So looking for a trend trade, maybe not the best, but what we can anticipate, right, is a potential push to the upside. Just based off of what we can actually see. We're at a previous support which has been respected for a break and a retest, wick rejection, EMA, prices stopped here, completely stopped here, bullish, stopped here, bullish candle, doji, rejection to the downside, rejecting the EMA, rejecting a psychological level. So there's clearly buyers at this area seen from the weekly, right? So when I go onto here, on the daily, you can see how we've had bearish, shifted bullish, shifted bearish, indecision, right? There's nothing really going on here. Shifted big bullish, right? Not these little shifts here. We've had a big shift, right? And now we're coming back to retest that support, resistance, support. So there's the potential for us to create a higher low here, to create a push to the upside, to create that weekly lower high and fill this wick potentially, right? Potentially. So we can either come back up and then just completely see the market push up and shift a structure again like a crazy cunt, or we could potentially see price pull up to create that lower high for us to then sell back down, right? But there's a potential buy position. And that is what I like. I like that a lot, right? And technically, it's a little morning star if you look at that, right? So it's nice. It's nice, right? Trend-wise, it's not nice. But when you dissect it and you look at it, it's like, okay, this makes sense. GDP AUD, my favorite trade. Potential, anyways. You can clearly see, again, look at the pattern. Lower low, lower high, lower low, lower high, lower low. Lower high break, retesting previous structure, retesting the EMA, retesting psychological level. We've had a nice, slow, steady pullback. We've bearish candlestick rejection to the EMA and psychological level, previous structure on the weekly. Now we have the potential to create that actual push for the next impulse, right? When I go to the daily, I see we created a tiny little shift of structure here. Okay, bullish, that's cool. I'm pretty sure we tried to sell against this. Yeah, I tried to sell against this twice the other week, which is where I got fucked. I would have won this trade, but I closed early. Stupid. And then we're not even going to talk about that trade. We're not even going to talk about that trade. You know, one bad decision led to a lot. But I'm back in business. So we see what shift of structure, right? So coming back to retest this area would be retesting previous structure, also support and resistance, retest potentially the EMA, retest that psychological level. If price just creates a little pullback here, we are golden to take the trade to the downside for the beautiful potential. And the reason I have this big ass zone marked is because on the weekly, that's resistance, support, EMAs in the middle. And I actually, yeah, you can just see that on the weekly time frame, this is an area where we want to see the market create that lower high. And it happened to so. But I still need my daily area of interest to get an accurate entry. And then we have that. Now on the 4 hour, we have a left head and a right shoulder. Okay. So all I'm waiting for is that 4 hour to give me some nice pullback, rejection, maybe like a shift of structure, just a quick lower high. NZD USD, I've just gone over this. Shift of clean structure indicates, okay, this is probably going to actually reverse now because it doesn't just shift for no reason. It did over here, but as of recent, it hasn't. NZD CAD, pretty much the same market, pretty much. This one's a bit dirtier, I won't lie. Like this has created that stupid shift, went bearish, created a stupid shift, went bearish, now it's created a stupid shift. But this shift has not come from cheap price action, we'll say, right? Look at this. You know, it's half-assed, and then we had that rejection straight away. This was not half-assed. and we came back, we had no retest, no candlestick rejection, right? So what I can see from these markets is, okay, they do fake out occasionally and then reverse. So how can I be smart about this market? Okay, I see that I'm not going to take an aggressive entry on this. I'm definitely needing to wait for a rejection candle for the loss of momentum, and an engulfing candle to indicate momentum, right? And that is at my area of interest, which is a strong probabilistic area for the market to be respected and to push away from. So you combine those things, and it's like, okay, it's worth taking the trade now. But if not, it's not a market to be aggressive on at all. And a market that I might be aggressive on would be GDP AUD, simply because of all the confluences already for this market, right? Euro NZD, I believe this is my last pair, yeah. Euro NZD. Again, it's a bit of an iffy. It's a bit of an iffy jiffy. But bullish engulfing, doji doji, bearish engulfing. What are you expecting? Wick pullback push, right? Now, yes, the market is bullish, right? Doesn't ever really shift, right, when you look at it. But where are we? The monthly just had two dojis, right? After a gigantic push. Now we have had two dojis previously and then continue to push up. But when you like, let me mark these out so you can see these things, right? And you come on the weekly, the market never shifted structure here, okay? The price action that it gave was simply strong push. Yeah, it came back down pretty fast, but then just slow, 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 slow. This market is showing slow, slow aggression, right? It was a small high created, right? So buyers aren't that strong to begin with. And we're seeing sellers quite strong in such a strong bullish market. It's not supposed to be happening, really. So that's like, okay, there's maybe potential for sellers to take over. Now, strong resistance, support, consolidation, right? Prices had a little push to the upside, couldn't do it, drop to the downside now. Create that shift of structure. We're at the EMA, simply just waiting for that pull. If we pull back to this area to create a boom, a potential like big left head, right shoulder, I'm looking to sell off of that. The 4-hour would give me a beautiful pullback to this strong support. EMA is coming into this area. You can see how it's been respected as resistance as well. I like it, man. I like it. Following the trend, seeing where momentum's leading me. We got left head, right shoulder. Bit of a shit one, but left head, right shoulder, retest the neckline. That's it. That is it for the markets. Again, just super patient. Took no trades last week. I've just avoided losses. Let me show you, right? This is what I avoided last week. Right? This looked beautiful for a sell. Absolutely gorgeous, right? For a sell position. I'm seeing this shit. This is like GDP AUD this week for me. I'm like, yes, I love the look of this market. Quick little rejection into this area. And then boom, we can sell this bitch down. Everything looks golden, absolutely golden, right? Just patiently waiting. 4 hours like, whoa, no, sir. You get no entry to the downside. And it just goes. And just simply waiting for that daily rejection candle, 4-hour candle, saved me a loss which I would have taken but 2 weeks ago, because I was waiting for that. I was waiting for this, right? Let me zoom in on this, right? This candle, if that bullish candle was bearish, I would have been looking to enter. That would have been two out of my 3 engulfings that I'm looking for. And I would have been so close. And then obviously this extra measures on top of that that I would have been waiting for. But I'll explain that when I find the trade. To be fair, I think I have explained that already. I might have or I might not have on the trade I took. But the fail safe, the what has increased my probability so much is 3 engulfings. 3 break and retests, 3 engulfings. It's a game changer. You just avoid so many losses, and the trades that do come have so many confirmations that the probabilities are just stacked in your favor. Like really stacked. You don't take as much trades, but you take quality, right? And you have better probabilities of winning. So in the long run, you actually make more money trading less. It is gorgeous. But that's what I needed to wrap my head around and understand. Okay, this and this makes sense. Okay, so patience pays. Patience actually pays. It just when you go through periods where you don't take trades and it's like the market's moving. And I called this. I could have made 2,000 on that. I could have made 10,000. I could have made 60,000 on that. Yeah. And when you're seeing that and you're thinking that, shit starts to go. It's like, your mind's going, your mind's going, your mind's going. Now you start thinking, should I? Should I change something? And that's what I did. But I've been through that experience now. So I understand that when that comes about next time, when I have those dry streaks where I don't take any trades, I'll be good. I'll be good. And it'll pay. Peace.